what's it going to take for the stock of EPR Properties to get its groove back? A year ago, this real estate investment trust owns all kinds of entertainment, recreation, education-related assets, megaplex movie theaters, amusement parks, retail centers, golf complexes, ski parks, charter schools, even a casino. It was one of the best-performing REITs out there. It was seen as a terrific play on the experiential economy thesis that I keep talking about. But EPR stock peaked last summer. And they failed to gain much traction this year. Stock's down 5% for 2017. Part of this is simply because EPR made a large acquisition that was mostly paid for with stock, buying a bunch of assets from CNL Properties, which created a new group of shareholders, many of whom probably decided to sell in late spring and early summer. Now that the deal's been done, and we know EPR is in good shape, since they just reported a nice top and bottom line beat earlier this month. Plus, the company pays you a bountiful 6% yield. I think the stock's cheap here, down more than 15 points from its highs. Is it time to circle back on this one? Let's take a closer look with Greg Silvers, the president and CEO of EPR Properties, find out more about how his company's doing and where it is headed. Mr. Silvers, welcome back to Mad Money. Good to see you, sir. Have a seat. All right.
Thanks for having me.
All right, Greg, I think there's a misperception out here, and I'm doing some digging ahead of when you came on, which is that because the box office wasn't that strong this summer, somehow EPR Properties should be sold. Could you just please refute that? Because I know it sounds simplistic, but there are people who are selling it on that.
Yeah, I think there has been a little softness in the summer, but the reality is that softness really only affects potentially our percentage rents, which are $1 or $2 million of our total revenue. Our underlying kind of day-to-day rents are very highly protected and are not impacted by this softness. And if you look, we always talk about box office on a yearly basis.
Right.
And so we still think that the 2017 box office is going to be relatively flat to 2016. When we look at it quarter to quarter, we'll see these fluctuations, but over the year, there's never been a year that's been down more than around 5%. And we're coming off 2 record years. So this is really kind of a reversion to the mean.
Okay, so in other words, you've raised the dividend each for the last 8 years. I shouldn't look at the box office and think somehow if that's flat, that means you can't necessarily raise your dividend.
Not at all. Remember, our revenues are not tied specifically to box office, but our rents continue to increase. Again, and remember, it's not simply box office in our theater tenants, it's the concessions. With the introduction of expanded food and beverage and the high amenities, we're seeing that tick up. So overall revenues can still do well even if box office is flat.
So one of the, I think also where the glaring light was, there is a movie chain stock that has been very bad. I would think that the only way they could actually maybe improve that is to do the kind of thing that you're talking about, the modernization. Maybe that helps their numbers and therefore helps EPR.
Yeah, I think I think what has occurred for them is they made 3 major acquisitions in a short period, and they're having some challenges with that integration. They still have been an innovator. They continue to modernize and high amenitize their theaters, and they've established a plan, and we think they'll execute that and get things back to normal.
All right, that's what matters. Now, last time we saw you, that you had just completed the CNL Lifestyle, a lot of shuffling in the properties. How is that acquisition working out?
It's been very favorable for us. Again, you mentioned earlier about the retail ownership. Our retail, we were primarily institutionally held.
Right.
We moved to about 20% retail ownership. Now we're about 12%. Okay. So we've seen some sell-off, but the good thing, it was very orderly. We didn't see any mass selling, and we retained a majority of those shareholders. So we still feel very good about not only about the performance of the property, but having this new group of shareholders are part of the EPR family.
Okay, charter schools, Secretary of Education, any impact there?
Again, talking about school choice is always positive.
Right.
Again, and it's more a state level issue, but having someone at the front who's talking about school choice is always a positive.
And Top Golf, it's a great retail concept. Do we expect maybe there's some sort of transaction that occur there? Again,
I think they're growing. Yeah. They've talked publicly about where they're looking at. There was a recent article about Callaway's valuation of their percentage, right. So very positive. So I think long term they will probably have a strategy that involves the public markets, but right now it's a great tenant for us. They continue to set records everywhere they open up, and we're great to have them in our family. When we first started talking about EPR, we've been recommending it for many years because we love solid income. There was this gleam in the eye about a casino. Now we even have it, Resort World. It's going to open up next year. Can there be a one-time transaction here, or is that just like you want that revenue and it's good and it's just going to somehow grow over time? Probably it's that. Okay. Again, remember, we're a ground lease. It's Resorts World that's building on top. Again, even the announcement with it moving to Resorts World, which the affiliation with the Gentine family is very positive, and they're ahead of schedule. We're excited about the project coming online. Will come online either at the end of this year or by spring of next year. that'll introduce an opportunity for some percentage rents,
right,
which could be a nice additive to the story.
Okay, last question, because again, I'm trying to figure out the underperformance, just trying to check each box. How is the credit quality of the overall portfolio compared to, say, 3 and 5 years ago?
Actually, I think we've improved it. Again, if you look at what we've done over the last 6 to 12 months, we've sold about 200 to 250, recycled that capital. So we're constantly looking at portfolio quality and trying to continue to improve that. So we feel very good about where we're positioned.
Geez, I think this is just the opportunity. I think that the idea that there have been a couple of dud movies and your stock goes down is frankly ridiculous. Okay, that's Greg Silvers, President and CEO of EPR Properties. I feel as strongly about this as I've had since we've been recommending the stock for multiple years. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.